Hi everyone, welcome back to another episode of Charting Markets with Jeremy. For today, let's take a look at the Straits Times Index. After seeing quite a sharp rebound in price in March, up close to about 10%, it does look like right now we are starting to see some weakness playing out, and probably with this bearish price section over here, we could kind of slip into some temporary pullback here before the next up leg begins. So let me just highlight some of the key points on the Straits Times Index. This is the daily time frame. And over here, you can see over the past 1 to 2 weeks or so, pretty much the STI has just been trading sideways. And more importantly, over here, the STI has actually faced this key overhead resistance at 3,450 points. So all in all, I think the last time we did actually saw a retest of this level at 3,450, it was actually back in February of this year. And you can see the immediate impact of the retest of this level actually saw the STI topping out and then entering into a sharp pullback, sharp correction phase. So it's no surprise this time around, I think the STI is once again facing a similar bearish reaction right now at this level. And in fact, if you were to zoom in, there's actually some clues of a possible pullback down further. This move over here last week on 31st March, forming what we call a kind of a dark cloud cover, probably signals to us that there could be further downside here in the near term before the overall long-term uptrend resumes. And then even looking from a kind of a longer term picture, it does look like we are about to break below this 2-week range. And the key level to watch is, I think the moment the STI breaks below 3,400 points, then that is when the next leg lower will actually begin. And we still do expect the uptrend to eventually resume, and do expect this pullback to be a temporary one and a short-lived one. So some key support level that we are expecting for the next rebound would be this level over here at around 3,270 points to 3,300 points. So that would still mean that the STI could still see about a 3 to 4% downside risk here in the near term. And this down leg would likely probably play out over the next 2 to 3 weeks. And then once we do hit those levels of 3,270 to 3,300, probably that is when we'll likely see the next rebound back up into the uptrend. And target-wise for the next rebound time frame, we'll be looking at maybe the next 2 to 3 months out. First target for the rebound would likely see the STI retesting this level of 3,450, and then after which probably further breakout higher would then see the STI targeting the next resistance at 3,600, which used to be a double top here back in 2019. So that will be the medium term, longer term view for the next maybe 2 to 3 months out. But right now, I think in the near term, we do still expect maybe a 3 to 4% pullback first to this cluster of support before the next up leg begin. And this would likely be the base case scenario. However, just to cover the downside, if it still kind of breaks below this cluster of support at 3,270, the stronger support will actually come in at this level here at around 3,210 points, which is also where the 200-day moving average is. So if you were to look at it as to how the STI has been behaving in relation to the 200-day moving average, you can see it does actually bounce off the 200-day moving average pretty nicely going back since September of last year. And the 200-day moving average has kind of been acting as an anchor here or a floor for the STI for this overall long-term uptrend. And we did get quite a bit of bounces around those levels, once in September in 2021, and then once more in November, December of 2021, and then more recently here back in March of this year. So do keep a close lookout. If this support at 3,270 fails to hold this time around for this pullback, we do expect the support at this 200-day moving average at 3,210 to effectively once again lead into a bottom. And that is probably the level that the STI would once again bounce back into the uptrend in this kind of a bearish scenario that we are seeing. Right now, I think the base case is still expecting this 3,270 level to 3,300 levels to hold. So only if it breaks below this level, then the next support will be at 3210, where we'll likely see further buying pressure coming in at those levels. But all in all, I think right now, long-term picture for the STI is still bullish. Just that in the near term, we are starting to see some profit taking at some key resistance level, which is why we are expecting maybe a slight marginal pullback first before we do expect the next leg higher to play out, eventually maybe even breaking out a new 52 weeks high. Yep. So that is all we have to share today, and we'll see you guys in the next one.